Okay, let's have a look at finishing off the special journals and posting the special journals to the general ledger. And I'll start off by maybe highlighting why special journals are such an advantage and why we have them. And I'll do that by starting to look at the general journals. Now, we can see with the general journal, I shouldn't have said journals before, the general journal, for each transaction we need to post each part of that transaction individually to the general ledger. So remember, we posted account payable to 202, note payable to 203. We posted those individually, every single transaction. If we go to the special journals, we can see with a lot of these items we can in fact post in total. So when we go to post the accounts receivable, we put all those transactions together. Now here it's only 3, but it might be 1,000 or 5,000 in a month, or even 50. But it saves us a lot of time. So how do we go about posting this? Well, I go to the accounts receivable, and we've got a debit of 108,460. So I go to the general journal, the general ledger, down to accounts receivable. In this case I'm going to be up to the accounts receivable, and we have June 30. This is going to be sales journal 1, and debit, special journal sales 108,460. Now, for many of you, the easiest thing to do would be to just write that number in, print off your special journals and post them into the general ledger. It'd be almost your quickest way. Now again, we've done this a fair bit of time. Your opening balance plus any new purchases people have had minus any payments. So there's that balance correct. That is a debit. We don't need to put it in because the normal balance of an asset is a debit. Now that's account 102. So we go back to the special journal and we write in account 102. So you'll write it in, that'll be the quickest thing to do. I'll just put the connection. So that bit's now done. We've posted that item all together. Now we do the same for sales. Sales, general ledger, 98,600. Getting close now. Sales, 30th of June, or do we have June 30? I think June 30. Credit sales, S1. Now this is going to be a credit. The normal balance of revenue is a credit, 98,600. And again, normal balance is a credit, so our sales prior to this month was 788,000, and we'll add the sales for this month. It's not likely you're going to have any minuses here. If the minus would be if someone returned something, but we showed that in the contra account of sales, returns and allowances. So an alternate to having the sales, returns and allowance column would be to go straight into this account and take it out of sales. Now this is account 400, special journals, 400. So these won't go green when you put them in, and actually they'll go blue no matter what number you write in. But hopefully you'll see your points going up. GST, general ledger, and accounts receivable and payable. Again, I just said call it receivable and payable because accounts receivable is a debit, accounts payable is a liability. So June 30, S1, and this is going to be a credit because this is money you've collected from your customers on behalf of the Australian Tax Office. It is 9,860, and again we owed 9,000 before. We've added another 9,000 to it, so we owe GST of 18,987. And what's that? Where does that come from? That's money we've collected from our customers on behalf of the ATO, and that's account 240. The inventory cost of goods sold. This one is a little different because we post both of these, and I'll show you how we indicate that. So we post the debit to cost of goods sold first, 72,100. General journal, cost of goods sold. So this is an expense, should be getting close now. Cost of goods sold, June 30. S1 debit 72,100. It's done, and again our cost of goods sold were 591,000 before this month started, and we've added 72,100 to it. Now the next item we'll need to put in, and we could go two ways to do this. No, I'll just focus on one. This will be June 30. This will be a credit to our inventory. Now, it is possible, depending on the order you do these things, that this could momentarily go into a credit balance because you're recording your sales before you're recording your purchases. So you're recording inventory out before inventory in. Now, but let's go to inventory, not inventory, let's go to inventory here. 72,100 out. S1, but it's COGS for June. Again, we had 273,000 and a bit minus 72,000 and a bit. So we're now down to just below 160,000. Now, that's a credit to account 120, and we go down to COGS, which should be about 500, and COGS debit to account 500. So we indicate that this way. You have an idea, 500/120. Don't leave any spaces, and now we see that's gone up to 100% for the sales journal. So we've got sales journal 100% complete. Now we can post the next items. Equals. Actually, I won't go through this because I think you should be right to do all of these. You can see you post that to accounts payable, credit, debit to inventory, debit to GST. And what's this debit to GST? Well, you've purchased things, and when you've purchased them, you've also paid an amount of GST in there. So that's an asset you have, because that's GST that the ATO owes you, because your suppliers have collected that from you on behalf of the ATO. But I'll let you go through, post all of those, and next time through we'll have the solutions up. Now, because there is some down here that are just a little bit different. So we now add all these columns up. So we just total all of these. Now I just copied that, Control C and Control V to paste. You could fill right, I could have done it this way, go across there, Control R, and have the same impact. Now I've got to post these items through. So I'll post cash at bank. I'm not going to post all of them. Again, I think you should have the general idea by now. Cash at bank 131. Let's go to general ledger. Right up the top, our first account. June 30, and it's the cash receipts journal. We know it's going to be a debit. Special journals cash receipts 131922, and again we know that's right. That's going to increase our balance to a bit over 140,000. Right, that bit is done. Now we need to go back and put in account 101. Now I think you can post GST, you can post discounts, accounts receivable you can post, sales revenue you can post, other accounts, and I'm just going to show you a different way to post. All of these you post by putting the item in at the bottom, but in the other accounts, we've got them here and here, see these spaces are white, we do post these transaction by transaction, and we post them in the posting reference column. So we'll need to go to A Noble Capital, and there's $25,000. So general ledger, A Noble Capital. June, well actually I can't remember what the date was. Now this was a receipt, I think, so this will increase A Noble's capital. Special journals, was it a receipt? Yes, it was a receipt, so it's a credit to A Noble Capital. I'll do the same to B Noble Capital while we're there. B Noble Capital, and we can see posting them account 301 and 302. Go back to the special journal, and let's go 301 and 302. So this tells us that we've posted those items to account 301 and 302. So I'll check the date, general special journal, that was June 14. So June 14, June 14, capital introduced. If I could spell it, capital introduced, and this was CR1, cash receipts 1, CR1, cash receipts 1. Now we just need to see their equity for each of them is increased by 25,000. So how can someone's equity change? Well, the capital account summarises all that equity, so they can put money in, that's capital introduced. They can draw money out, that's drawings, and for drawings we have a separate account. You could take it straight out of there, but that's not what tends to happen. A separate account is kept for drawings, and mainly because not much happens in the way of capital introduced. It's more, for more businesses, more likely money's drawn out than capital is introduced after the start. Because if you're continually introducing capital to the business, that is a problem. Now, the other way that capital can change is if the business makes a profit. So capital can change if people put money in, capital introduced, if people take money out, drawings, and the other one is a profit. And what's a profit? Well, it's going to be the net of all our sales, all our revenue, less all our expenses. That's our profit. And you'll get quite strong with this with the accounting equation. We've got to look at the accounting equation and become really strong with that. So let's go back to the special journals. What we tend to put at the bottom of these columns is an X. The other columns to say these items are not posted because they're posted over there individually. Now we can see something similar would happen here. So let's add these columns up, equals. Now we'll post the GST in total. We'll post accounts payable in total. We'll post here credits, GST, and well, there was none, and cash at bank. We'll post in total. Again, the credit, cash at bank, we've spent money, our cash at bank will go down. But these bits here we need to post individually. So rent. Rent is 5150, so go general ledger. Rent is an expense, it'll be down towards the bottom. The chart of accounts goes in the order of the accounting equation, which is assets, liabilities, owner's equity. And owner's equity is made up of the permanent account, of the capital, and the temporary accounts. Drawings is a temporary account. Then all the revenue and expense accounts are temporary accounts. And so they come in the order of sales and any items related to sales, contra accounts, then expenses and any items related to expenses. In the middle of those is COGS, cost of goods sold, which is typically going to be in these the first expense item. In some ways because it has the nature of a contra revenue, but we treat it in here as the first expense. But I need to go down to rent. Rent, expense for month, it'll be a debit, it's an expense, the normal balance of an expense is a debit, 5150, cash payments 1, the date, I'll look at that in a bit. So our rent was nearly 40,000 before the month, we paid another 5, so it'll be nearly 45,000, well 44.5, righto. The date, rent for June, the date is 15th, and then salaries on the 30th. Right, sales salaries will come first, they should. The salaries, so June 30, and again it's going to be a debit. No, I've left out office supplies, we'll come back and post that in a bit. So the total salaries were paid for the year, going to be 52,000. Looks like $1,000 a week. Now, what have I not done yet? Well, I haven't put this in. Cash payments 1, but I haven't gone back to indicate sales salary 601, and I didn't put in rent account 629. So back to the special journals. Rent was 629. And sales salaries was at 601. Income, sales salaries 601. That sort of makes sense that it's the first expense. Righto. So we also need to do office supplies 8,000 and office salaries 3,000. So I'll do office salaries. $3,000, June 30. Office supplies 8,000. June 14. June 14. Oh, why didn't that go debit? Why didn't that go green? CP1. Ah, of course, there's a very good reason why it didn't go green, because this is a mistake that can often be made. This is not our expense for office supplies. This is the purchase of office supplies. So this will go into our storeroom because we haven't used the office supplies yet. So it's a good point that we go back up to supplies on hand. So when we purchase supplies, June 14 equals debit $8,000, and we can see we should have a total of $8,000 of supplies in our storeroom or wherever we keep them in the office. Now, one thing we'll find a bit later, we get on to do adjustments to actually work out how much of these we used, and we do that by counting out how much we had left. So say if we had $10,000 left, we would then know that we'd use $6,000 worth. But we'll get to that in the adjustments. Cash payments 1. So that goes account 130. And office supplies, office salaries will be 600 and something. $627. Now again, you can go and post A Noble and B Noble drawings. I guess you got a sense of that. They go in the drawings account, not in the capital account. And these totals, we post those in total. So I'll just do the cash at bank for you, and I'll actually I'll do COGS, inventory, cash in bank, and then I'll let you do the rest by yourself. So COGS and inventory. Actually, I think what I'll do is do a few, pause this, and then so some of the results are showing at the end that you can have a look at. So we should really go back up to here and start putting them in the order you would post them, so you got more chance of things going green. So I'll start here with accounts payable and inventory, but I'll come back in a few minutes. So from the purchases journal, our accounts payable goes up almost 131,000, and whoops, and so 273 we now owe. Again, and when we make purchases on credit, we therefore owe more money, therefore our liabilities increase. An increase in a liability is a credit. So just a quick review of inventory. We purchased almost $120,000 worth in June, so this will increase our inventory. Inventory is an asset, and therefore we indicate an increase to an asset by a debit. The normal balance of an asset is a debit. And with our GST receivable and payable, the posting from the purchases journal where we purchased inventory, we also, when we made those purchases, the suppliers collected GST from us on behalf of the ATO, so that becomes effectively an asset for us. That's GST we've prepaid. So we've collected some GST that we owe to the ATO, but we've also paid some GST which will come back to us as a credit. So 18,000 minus the almost 12,000 we paid. So at this stage we only owe them $12,000. So that's a liability of 12,000 credit. And again, I'll have to go back to, that's 240. GST payable 240. So we can see we now have all of the purchases items posted as well. And unfortunately, purchase journal over here is not on 100%, so I don't know if I've made a mistake somewhere. It could more likely some issue with the graph. Then we need to go down and post the rest of these items here. So I'll stop the video and post a few more. This transaction is probably worth talking about. Well, it's the total. It could happen to all of these, but it did relate to Arthur Fons got a discount, and so when he got a discount, there's some GST we thought we'd collected which we hadn't. So now that's less of a liability we've got. So we'll go over here and it'll be easier. Let's do this. So this is going to further reduce our GST liability. Why we when we made a sale, there was a certain amount of GST we thought we'd collected, but we gave a discount, so in fact we were going to collect less. So now let's look at the or post the discount. We gave a discount. So if we go back to Special Journal, it'll be a debit. We gave a discount of $630 to Arthur Fonds, but this could be the total. 400.3, it's a contra asset. So a contra, sorry, not a contra asset, a contra revenue. The contra effectively means we could have taken this item, posted it as a debit to sales and reduced our sales there. But contra accounts provide us more information about this. So at the end of the year, we know not only will our sales be lower, but our sales are lower because we returned some items, we've had a bad debt expense, and we've given discounts. So the contra accounts give us more information about sales. So June 30, reference, this should be cash receipts 1, and so total discounts 630. Debit. So this is a contra revenue, which is a debit. So you can see it's a bit like the nature of an expense, and the normal balance of an expense is a debit. So I need to go back and put 400.3 in. So we'll update our accounts receivable. People have paid $53,000 of what they owe. So their clients we've made credit sales to, they've now paid that money. So that will reduce the asset of accounts receivable. So we go 226,000 minus what people have paid, 173,000. Actually, that's enter the closing balance. So that's going to be the closing balance. Now, one other thing we should do is check that to somewhere. Now, where should we check that to see if it's correct? This is accounts receivable. So if we go to accounts receivable, subsidiary ledger, accounts receivable, subsidiary ledger. So what we can now do is add all of these items up to see, I'll go here, as per, gone too far down, accounts receivable, subsidiary ledger, as per general ledger. So general ledger 173, 160, so we can now check that. And I'll just stop this while I put the totals in. So I've totaled each of the items up. And now we can add up each of the account balances. So ABC Insurance owes us nearly $16,000. Arthur Fonds owes us nothing. Clothes Galore owes us over $50,000. Fred Flintstone owes $43,000. Sporting Goods owes us nothing. And Travel for Us owes us $63,000. So I've added all of those items up. It comes to 173, 160. So we can have some comfort that our accounts receivable subsidiary ledger is correct. We can't be totally sure, but some comfort. So back to the general ledger, and that's there. I think this probably is a good time to stop this. Now, I hope this has given you the clues of what you need to do to go on and finish posting all of these items. And then also when you get accounts payable, we've posted all of those. You check the total to accounts payable subsidiary ledger. And when you've posted all the inventory ones, you should check it to the inventory record. If I just look at our progress report, we can see now special journals are really close to being finished. If we come down a bit further, sales journal, I've completely got it done. Purchases journal, it only says 90%, so I think that's as high as we're going to get. I can't see what I've left out of the purchases journal. Looks like some of these items, 1, 2, 3. Well, Arthur Fond's date is one of them. So, there's still... I'm looking at the wrong journal. So these terms haven't come up correct. I don't know why. I'll find out. But again, we're making reasonably good progress. Subsidiary ledgers, almost done on the subsidiary ledgers. So accounts receivable, subsidiary ledgers should be pretty much done. And the inventory worksheet, the only reason that's not complete is we changed the date of a transaction. General journal, still a fair bit to go, haven't started bank rec, a lot of stuff happening in the general ledger. And I guess you can see the general ledger does have a lot of stuff in it. So that's why we're taking a bit of time now. So we're doing postings to the general ledger. Righto, bye, and it's good to see this part of the graph is filling up too.